Jim Bianco, president of Bianco Research, is here. Good morning to you. Great to see you. How are you feeling about the market?
A little queasy, if you will. I don't think we're quite through the worst in the bond market right now. I mean, it might have a respite of a week or two, but I don't think the last word has been said on this. And I actually think that the center of the universe right now is the bond market. Bond market moves, everything reacts to it. Why are stocks up today? Because bond yields are down 8 basis points. If bond yields turn around, I suspect that stocks will turn around.
Okay, so a little queasy. John is giving us the long run, the long term, rather than being nervous, because I think a lot of investors are nervous, as they should be. I mean, you see the VIX jumping to 60, the dollar's below 100. I mean, things are sort of all over the place. Are you buying on dips, selling into strength, both maybe?
Not yet, because I think that the fundamental thing that I see is the last week we've spent talking about stuff that nobody understands, basis trades, leverage trader unwinds, whether or not the Chinese are selling U.S. Treasury securities. And none of that, I don't think, starts a trend. They exaggerate a trend. What started this trend is in my mind, very clear Federal Reserve talk that they're very worried about inflation. And what does that mean? That means that for all your talk about a recession, they're not going to cut rates. And that's why we have a 20% chance of a rate cut in May. So I think this threw everybody upside down. What are we supposed to expect when there's talk of recession? The Fed will go to zero. The Fed will print money. They'll do whatever it takes to stimulate the economy out of a recession. Well, now everybody's saying we're going to have a recession, and they're saying we're not going to do anything. I think that that's really the tipping point, is this fear of tariff-driven inflation, and it's holding the Fed on the sideline. And this is something we have not seen in decades. And I think that started the selling, that stressed the leverage players, that stressed everybody else, and then it got exaggerated. And that's why I don't think it's over with, because we're still talking about tariffs. We're just arguing about what the percentage is. We're still talking about potentially more inflation later this year because of tariffs.
Understood. So do you have areas that you find some solace in, areas that you think could work for investors now?
Well, obviously, gold is a place that it's going to work for investors. This, because of all of this, uncertainty that we've seen, gold is starting to assume its positioning as safe haven. Cash is definitely a place that's, it's the best performing asset because it's the only one that hasn't gone down, other than gold. But beyond that, if you're looking at the markets and trying to figure out when to buy these markets, I do think also what's happening is that there is going to be a rotation, and that rotation is going to be, let me put it to you bluntly, you could delete SPY, you could delete VU. Buying the broad-based indexes, I don't think is going to be a good strategy over the next couple of years. What I think is going to be a good strategy is going to be, you're going to have to start picking stocks, you're going to have to start thinking about themes, you're going to have to start thinking about sectors. Now, here's the problem with that. No one knows how to do it because no one has had to do it. They've always talked about buying the market, whether or not it's going to go up or down. So within that, I think that transition away from the market. Look, this is going to be like the 70s, where the broad index went slightly higher is all it did. I think it's going to go 6% over the next decade. But within that, if you bought energy at the right time, if you bought consumers at the right time, if you bought gold at the right time, there were 200 or 300% gains to be made in those, even though the market, the index, the Dow, if you will, which was the popular one in the 70s, went sideways to slightly higher for the most of the decade.
Yeah. Give us that forecast again. You said you do think in the long run, X% gains. I mean, what do you say for the long run?
So I've been using as the model that over the next several years, cash will return you 4%, bonds will return you 5%, and stocks will return you 6%. Now, I know people have been, used to the 25% gain last year and the 22% gain the year before in stocks, and they're going to go down to 6%, and bonds and cash are going to be acceptable alternatives. Cash is going to give you 2/3 of what the stock market's going to offer at the index level with no volatility, a $1 NAV every day. Now, like I said, within that, if you want to play individual themes, be it financials, healthcare, energy, AI, Europe, small cap, large cap, developed, emerging. There's going to be a lot of opportunity within those themes. But if the answer is when is the S&P going to go up, I think that game is over with right now.
All right. Now hold the thought, Jim Bianco, as we hear the bell. So there you have it. That's our opening bell. Stocks are opening to the upside. I see pretty much every sector in the green. Apple, Nvidia, Amazon, GE, Walmart, Procter & Gamble, Visa, Eli Lilly, Johnson & Johnson. Mostly green arrows across the board here. Energy is up about 2% today. Looks like every sector is in the green. Tech is higher. Communications, services, financials, and consumer discretionary. Our opening bell, David Frost, a 6-part documentary series, ringing the bell there with his family. And there you have it. We kick it off with up arrows. The NASDAQ up 2.2%. We talked about tech doing incredibly well today on the heels of some loosening of the tariffs, exemptions on the tariffs, however you want to specify those. The S&P is back above the 5,400 mark. The NASDAQ's up 2%. The Dow is up 448 points. Let's continue our conversation with Jim Bianco. Well, how do you feel about this opening bell? Pretty good after last week that we have followed through, because last week was the best performing week since 2023. You'll take it, right?
Oh, yeah. I mean, I'll take it that we have got a rally going on. I mean, it was 1 week ago to the minute that we were talking about a big down opening and everybody was glum. And that was the low of the week. And the market pretty much traded higher for the rest of the week. I hope this isn't the high of the week and we just trade lower, just kind of an inverse of it. But yeah, you're right. We've got some momentum going and we're working on a retracement in the market, and that's good.
Yeah, and you make a good point, because the question was whether or not we hit the bottom, whether or not we had capitulation. It's hard to say. Do we go back to those last Monday lows? Because even when we sold off, we kept looking at that as our barometer. You didn't want to break those lows.
Yeah, I think so. And I think the tell will be whether or not the bond market can hold in. The high yield of the move in the bond market, the 10-year yield, was 458 Friday afternoon. No one is good enough that we can all pick within 24 trading hours of when the high is going to be. So I think the jury's still open on whether or not we've seen the high. Oh, but yields are down 18 basis points since that peak on Friday afternoon. They were down 25 Wednesday and Thursday, and then it shot right back up and made a new high on Friday. So if the yields wind up going higher than that 458, that would probably pull down everything else with it, like the dollar and the stock market and the like, because I do think, like I said at the top, I think that everything is kind of keying off of interest rates right now. And this idea that we've got this bond sell-off when it should be the safe haven flight to quality asset.
Yeah, just quickly, small caps, anything alt investing, anything that you're looking at there. Small caps have been beaten down, of course. Any final quick thought?
Yeah, I think that small caps might be an interesting play, because if you're worried about tariffs, there's probably, within the small cap space, you're going to find a lot of companies that produce American and sell American that are somewhat immune from the tariff play. And I think that that's been a little bit overdone.
Okay, year to date, small caps, the Russell down 15%. Jim Bianco, President, Bianco Research. Thank you so much for being with us.
Thank you.
This, as the Dow right now, is up 425 points.